Hello, everyone.
Hi.
Just give everyone a minute or two to join. For those who are here, we'll do a little icebreaker. Let me think. If you could give Payroll a theme song, what would it be?
What would yours be?
I'm gonna go like really typical with like "Shake It Off" by Taylor Swift, because I feel like in Payroll we're doing that a lot. Like we have to just get on with it and move on. What about you?
I think Florence has Shake It Out, but
Oh,
otherwise I was thinking more like Everybody Scream from her latest
yeah.
album. I don't think I need to explain why.
Yeah. Spandau Ballet Gold.
Nice.
Yeah, I like it. Under Pressure Queen. That's a good one. Yeah, I like that. Hi everyone. We're just having another minute. Let people join. We're just asking what song would you give Payroll if it had a theme song? If anyone wants to give that, in case they're wondering why we've got random songs dropping into the chat. Extenders theme tune. I don't think I know that. I'm gonna have to go and have a listen and see what that. I feel like we've got a playlist starting here for the busy payroll time. Oh, EastEnders. Roller coaster. They're good. They're good.
Oh, the EastEnders theme tune. That makes more sense.
Good. So we'll get started. So hi everyone, and welcome to PayFit's Power Hour on preparing for the autumn budget. Try saying that 5 times fast. I'm glad I got that out in it, and we all understood it. Hopefully, if you haven't met me before, I'm Kay. I'm a payroll expert here at PayFit. And I support some of our most complex UK payroll cases. So, working across escalations, audits, pensions, data issues, all to help our customers stay compliant and confident in their payroll. And we also have my partner in crime here, Rebecca, who I will let introduce herself.
Thank you. Good afternoon, everyone, and thank you so much for joining us. I'm Rebecca, PayFit's Product Legal and Compliance Advisor in the UK. I'm really happy to be here with Kay for another Power Hour. Kay has just been promoted to payroll expert, so if you send your congratulations in the chat, I know she'll be very happy. She really deserves that. She's got fantastic knowledge and experience, and I'm so proud to have her in the PayFit team. For those of you who don't know me, my role at PayFit is to work closely with our product and engineering teams to make sure our software stays fully compliant with UK legislation.
Brilliant. And we also have payroll expert team lead Akash in the chat ready to answer your questions. So make sure you keep him busy in there as well.
Okay, so here's what we'll be looking at in today's Power Hour. So we're going to start with the confirmed legislative changes that will shape payroll from April 2026. We'll talk about the statutory sick pay reform, the expansion of parental leave rights in both Great Britain and Northern Ireland, and the introduction of the Student Loan Repayment Plan 5. We'll also touch on payrolling benefits, which will become mandatory in 2027, but we'll explain why it's worth preparing early. Now that we're heading into the festive season, we'll go through a quick Christmas payroll recap to help you plan ahead for bank holidays, pay dates, and Christmas parties. And then we'll move into some of the product updates of PayFit, things like the new interactive payslip, which helps employees understand their pay, and engagement surveys, which gives HR teams some real-time feedback about their people. We've also got a couple of short polls throughout the session to keep things interactive. And of course, we'll have time at the end for a Q&A. So feel free to pop your questions into the chat as we go, and we'll make some time during the webinar to answer them, or we'll answer them at the end. And I'll pass over to Kay for our first poll.
Thanks, Rebecca. So you should see a poll pop up in the bottom corner, and we're asking, how ready do you feel for the next wave of payroll legislation changes? So are you ready for it? Is it all a blank space? If you got those references, give yourself 10 points. But choose your answer in the poll. It should just pop up in the bottom corner for you there. There's no judgment at all as well. So please feel free to be honest. So are you still catching up? Are you watching what's coming? Are you feeling prepared? Or do you teach this stuff to others? So let's have a look at what we've got in the poll. A lot of watching what's coming. Yeah. Us too. If I'm honest, like we're all keen to see what's going to change as well, aren't we? Fab. Brill. So thanks, Lauren. Yeah, I'll hand over to Rebecca now to get us started then.
Okay. So let's take a look at the confirmed legislation changes coming in 2026. Everything we're going to cover in this legislation section is based on the Employment Rights Bill as it stands today and the government's published roadmap. The final regulations are going to add more detail, but the overall direction and changes we'll show you today are confirmed. We'll start with one of the biggest updates, which is the reform of statutory sick pay. So this is one of the biggest confirmed changes coming in April 2026. From the 6th of April, SSP will be paid from the first day of sickness. That means the current 3 waiting days will disappear completely. This also means a change to the definition of a period of incapacity for work, or PIW. At the moment, someone has to be sick for 4 consecutive days for a PIW to form. And under the new rules, a PIW will form from a single day of sickness, which is going to make things much simpler for everybody. The lower earnings limit will also be removed. Currently, anyone earning below £125 a week doesn't qualify for SSP at all. And from April 2026, all workers will qualify no matter how many hours they work or how much they earn. And it's a significant change for lower paid or part-time workers. In terms of the amount paid, SSP will be the lower of 2 values. So either £116.75 a week, which is the statutory rate, or 80% of the employee's average weekly earnings. The fixed rate is expected to increase again for the 2026-2027 tax year, and these figures will be confirmed closer to the time, perhaps even as early as next week. One thing that isn't changing is the overall maximum entitlement. So employees will still be entitled to up to 28 weeks of SSP in total, and the linking rules still remain. So separate periods of incapacity for work are still linked together if there's less than 56 days between them. Sorry, no more than 56 days between them. These changes will apply to both Great Britain and Northern Ireland because SSP is part of the UK's social security framework. And of course, once the final regulations are published, PayFit will automatically update the rates, the calculations, and eligibility in the app, so there's nothing you need to do. To show how big of an impact this will have, let's take a look at a simple example to compare the current rules with the new ones. Thank you. Very quick. So here we have 2 employees. They both work 5 days a week, and they're both off sick for 5 days. The sickness isn't linked to an earlier absence, so it's a brand new period of incapacity for work. We'll start by looking at the current rules, so before April 2026. The lower earner here earns £120 per week, which is below the lower earnings limit of £125, which means that they don't qualify for SSP at all. So their SSP payment is simply 0, even though they worked regularly and they were unwell for a full week. The higher earner, earning £450 a week, does qualify, but because we have the 3 waiting days, only the last 2 days of that week of sick leave are paid. So instead of the full weekly rate, they only receive 2/5 of it, which is £47.50. From the 6th of April 2026, things are going to be very different. Here you can see the lower earner, still earning £120 per week, will now be entitled to SSP because that lower earnings limit of £125 is removed. Their SSP will be based on 80% of their normal weekly earnings, which is £96. There are no waiting days anymore, so they receive the full weekly rate. The higher earner continues to be entitled to the full weekly SSP rate. We're using the current statutory rate of £118.75, but we expect this to increase. Because there's no waiting days, they're paid for the full week and not just the last 2 days. So in this example, both employees receive more SSP, and the changes are going to make it much easier to explain to employees their pay once we've taken away those waiting days. If anything in this example isn't clear enough, feel free to pop a question in the chat and we can take a look very soon. But for now, I'll let Kay take us through the new student loan repayment plan.
Thanks, Rebecca. Yeah, so let's chat about student loans, specifically the new Plan 5. So this one launches in April 2026 for new borrowers in England and Wales. And the way it's going to work is calculating on 9% of earnings over £25,000 per year. And it works just like the other plans that you already know, so plans 1, 2, and 4. If an employee doesn't tell their employer which plan they're on, they'll default to plan 5 automatically. So the important thing here is that plan 5 is going to become that new default plan. For plan 3, post-grad loans, they can still run alongside other loans as well. And it's a good time, we would recommend you start updating internal starter templates if you use them, and keep an eye out for those new student loan notices as they come through. Also, make sure to check payroll deductions once Plan 5 starts, so everyone's on the correct plan and paying the right amount. Just saves any surprises for your employees. Your payroll software, PayFit especially, will do this automatically for you and calculate it for you correctly, but you can always do a quick calc yourself to check. So a really quick way, if you get your calculators ready, is take £25,000 and divide it by 12 for monthly paid employees. That will give you £2,083. So if your employee is being paid over that amount and has a student loan 5, you should expect to see a deduction. As I said, the deduction will be 9% on anything over that. So 2 really easy things to look for: paid over £2,083 and on plan 5. If so, then a deduction should be shown on their payslip. And I will hand back to Rebecca to take us through parental leave changes.
Thank you. Okay, let's take a look at the changes to parental leave that will take effect in Great Britain from the 6th of April 2026. On the left-hand side of the slide, we've summarised the current rules. So right now, to qualify for paternity leave, an employee needs to have been employed for at least 26 weeks before the qualifying week. And paternity leave must be taken before shared parental leave. You can't take it afterwards. For unpaid parental leave, the eligibility period is even longer. Employees need to have been continuously employed for a full year before they're entitled to take that leave. This can be very restrictive and can mean that some parents can't take time away from work when they become a new parent or they need to support their child. From the 6th of April 2026, those rules are going to change for Great Britain only. So both paternity leave and unpaid parental leave become day 1 rights, which means eligible parents will be able to take these 2 types of leaves from the first day of their employment, so they don't need to meet a 6-month or a 1-year service requirement. Another important update is that paternity leave will now be able to be taken after shared parental leave, so families have more flexibility when they're arranging their time off. At the moment, these updates apply only to Great Britain. Northern Ireland will keep the current rules, but they are expected to introduce their own legislation at a later date, but not in time for April 2026. We'll keep you updated anyway. But in the meantime, let's take a look at what Northern Ireland is changing instead. So the changes coming in Northern Ireland go even further than the reforms we've just covered for Great Britain. On the left-hand side of this slide, you can see the state of play currently in Great Britain and in Northern Ireland. Today, statutory parental bereavement pay is only available to eligible parents who've been employed for at least 26 weeks before the relevant week. That's the qualifying week for births or the matching week for adoptions. Parental bereavement leave and pay are available when a parent loses a child from 24 weeks of pregnancy onwards. So it includes stillbirths and the death of a child under 18. From the 6th of April 2026, Northern Ireland will introduce 2 big changes. First, statutory parental bereavement pay becomes a day 1 right. This means eligible parents in Northern Ireland will no longer need to meet the 26-week service requirement. They'll be entitled from the very first day of their employment. Second, Northern Ireland is introducing a brand new entitlement, statutory parental bereavement miscarriage leave and pay, which is available when a pregnancy ends before 24 weeks. It's a major step forward in supporting parents during extremely difficult circumstances, and it ensures that employees who experience a miscarriage are recognised and supported with both time away from work and statutory pay. I've also added that when paying miscarriage-related statutory parental bereavement pay, HMRC requires the employee's workplace postcode to be included on the full payment submission. This is how HMRC confirms that the employee ordinarily works in Northern Ireland and therefore falls under Northern Ireland specific rules. PayFit will automatically determine whether the new rules apply or not, based on where the employee ordinarily works. So it's important in PayFit, if you're using it, to double check that you've selected the correct country in their contract information on PayFit. Next, we'll move on to what's coming up next in the wider legislative timeline. Just going to see, do we have any questions? I think there was a typo in the slide on the SSP rate. Sorry, that was me. I think when I was going through, I was using the correct rate though. Okay, so what's next? So everything we've talked about so far, like the reforms to statutory sick pay and parental leave, both sit within the Employment Rights Bill. The bill is currently in its final stage in Parliament. We expect it to receive royal assent later this year, so 2025, so it will officially become the Employment Rights Act 2025. Once that happens, we'll see the detailed regulations and guidance published in early 2026, and these will give us further details on eligibility, calculations, and employer responsibilities. And those new rules are going to take effect from April 2026, so we don't have a lot of time to implement those. Alongside this, we also have the autumn budget, which takes place next week on the 26th of November 2025. Although the main family leave reforms and sick pay changes sit within the Employment Rights Bill, the budget is still super important for payroll teams because we often see updates to tax and national insurance thresholds, national minimum wage, etc. Those national minimum wage rates are usually confirmed in line with the Low Pay Commission's recommendations, so we'll be keeping a close eye on that, as well as any new measures that can affect employers financially. As always, we'll be following the budget closely, and we can share a summary of updates shortly afterwards. If you're using PayFit, you won't need to make any manual changes in the system. PayFit will automatically update your payroll settings in time for the new tax year once the final regulations, thresholds, and rates are all confirmed. So that's what the next few months look like from a legislation point of view. Now let's move on to payroll benefits, which also has some changes coming soon.
Yeah, so benefits, this is a big change. From April 2027, payroll and benefits will become mandatory for all employers. So you may think, well, the plan was 2026, that's right, but it has been pushed back. You can start payroll and benefits from April 2026 to get ahead. You might already be doing this as well. But if you aren't payrolling at the moment and you want to start doing that in 2026, you'll need to register now with HMRC. So payroll and benefits removes the need for pay 11 days completely. So tax will be collected in real time through payroll. And we're also expecting some alignment between Class 1 and Class 1A reporting. So we'll be keeping an eye out for those updates there as well. Also, just a tip, communicate these changes to your employees early so that they understand how their benefits will now be taxed through payroll. We do have a guide that we'll send out that has an employee communication template so that you can kind of structure how you're going to let them know about the changes to their benefits. Another thing is just to make sure that your benefit records are accurate and up to date. So everything is much easier when you do switch over and there's no amendments to worry about. It's also important to get your benefit providers involved early and make sure that all your reports are ready for reconciliation at the end of the year, whether you're payrolling, using Pay11D or transitioning. So yeah, that would be our top tips there as well. And don't forget, we have got Akash in the chat who is actually our resident benefit expert. So yeah, keep him busy if you've got any benefit questions. So we are going to run another quick poll. Firstly, what we want to know is, when is it too early to put up your Christmas tree? No, just kidding. It's a safe space. Mine's already up, so I'll have no judgment. Thank you. So which upcoming change is going to have the biggest payroll impact to you? So is it the SSP reform, Student Loan Plan 5, parental leave changes, or payrolled benefits? So again, you should see the poll in the bottom corner there. And we'll just have a quick look.
Payroll benefits, yeah.
Got a feeling.
Yeah.
I think the parental leave is going to be a big one when it comes in, but the payroll and benefits, I think, is the one that's been looming for a while, isn't it? So
I think parental leave doesn't necessarily impact all employees, but if you have a benefit for all employees, then it impacts everybody on your payroll. So
yeah,
very big.
Yeah, it's won by a landslide there, hasn't it? So
Yeah.
thanks so much. So speaking of Christmas trees and Christmas, we're now going to look at preparing for December or the Christmas payroll. And then we'll move on to a few new PayFit features and some pro tips. So I'll hand over to Rebecca now.
Thank you. Okay. So as we head into the festive season, here's a quick few reminders. The first thing to check is bank holidays. If your normal pay date falls between the 25th or the the 25th to the 29th of December, you need to submit any BACS files by the 23rd of November, so you might need an earlier cutoff date internally. And next is the usual pay date. So even if you pay employees earlier because of Christmas, make sure you still use the usual contractual pay date on your FPS to avoid affecting any employees who receive universal credit. It's also a good moment to review holiday entitlement and carryover rules, especially because many employers begin a new holiday year on the 1st of January. That means employees may receive a fresh allocation of leave right after Christmas, and some might need to use up any of their leftover days before the year resets. For Christmas parties, the £150 exemption applies as long as the event is open to all employees and the total cost per head for the entire tax year doesn't exceed £150. You need to account for all annual events, not just the Christmas one. So for example, if you have multiple events like a Christmas party and a summer party, and together for each person they're more than £150, then the full amount becomes taxable and not just the excess. And finally, Christmas vouchers or gifts. These might fall under the trivial benefits rules, which means that they're exempt from tax and national insurance, but only if they're £50 or less and can't be exchanged for cash. These small details can make a big difference at a busy time of year, so it's worth taking a moment now to check that everything is set up correctly. Now let's move on to some product updates that can help make this period and the rest of the year much easier for you and your teams. So now that we've covered the legislation, let's take a look at those product features. So they're designed to bring you more transparency, fewer payroll questions, and a much smoother experience for both admins and employees. So this is one of our most exciting product updates we've released recently. Oh, we have a problem with the GIF. We're supposed to have a little demo of it. Okay. So this is the interactive payslip. That's not what it looks like. It's something that's been requested a lot, and we're happy to see how it's already helping both payroll teams and employees understand their pay more clearly. First of all, every line on the payslip is now clickable. So instead of seeing just a label and a number and having to guess where it came from, you can simply click on it and see a clear explanation of what that line means. Each line also shows how it's calculated, which is incredibly helpful when employees have questions about their salary, their pension, their taxes, etc. The feature is available to both admins and employees, so everyone sees the same information. It significantly reduces the number of back and forth queries between teams because people can explore their payslip in their own time. And for some of the more complex areas, such as statutory sick pay, maternity pay, and income tax, the explanations actually use data from the employee's own payslip, which means that the breakdown is personalized to them. We're continuing to expand the number of dynamic explanations across the payslip, so over time, even more lines are going to include personalized explanations based on each employee's circumstances. Overall, the interactive payslip makes payslips easier to understand and helps employees feel more confident about how their pay is being calculated. And next, I'm going to let Kate talk you through another great new feature in PayFit.
Yeah, so let's talk about engagement surveys. So this is a really handy new tool in PayFit to understand how your team's feeling. So you can create custom surveys or ENPS surveys to get honest, meaningful feedback, and everything is completely anonymous, so your employees feel really safe being open. And you can choose how often you want to check in. So for example, if you want to do a monthly survey, quarterly, every 6 months, and you can set surveys to reoccur automatically as well, so you're not having to remember to launch them each time. Once the surveys are live as well, you can track scores and trends over time, and things like ENPS, participation rates, and results by theme, such as management or recognition, so you can see what's working and where you can improve. You can then dive into individual questions as well and look at how the scores are distributed, and then read anonymous comments to understand the why behind the numbers. So you can turn that into real actions for HR and managers. You can also pause surveys as well. So if you just want to take a break, instead of deleting them, you can just put a pause on, and then all of your historical data is safe and ready for your next run. And we'll finish off this section with just a few pro tips from us. So First, review your policies for any day one entitlements for sick and parental leaves. So update your employee handbooks or policies so that employees are aware of their entitlements. If you use starter forms, make sure that you add Plan 5 to your student loan section so that employees can choose the right one, and be prepared to start seeing those notifications coming through from HMRC. Make sure you register with HMRC before April 2026 if you want to payroll your benefits early. And whether you payroll from 2026 or you're waiting for 2027, make sure you communicate that to your employees so that they're aware of the impact it's going to have on their payslip, because it will be a little bit different for them. And make sure that you keep HR and managers up to date on changes, update any handbooks that they may use as well, just so that everyone's aware of the changes that have happened. And over to Rebecca.
Thank you. Okay, I want to show you how PayFit supports you through all of these changes. So first, PayFit includes automatic legislation updates. So as soon as the new rules come into effect, the updated rules and calculations are applied straight into your payroll. You don't need to adjust any settings yourself. We also have built-in support for the new and updated leave types. So as you've seen today, we have several family-related leave types that are changing in 2026, and these will be included directly in PayFit with the correct rules and calculations already in place. But one of the things that really sets PayFit apart is our dynamic in-app guidance and functionality. So because the system asks where each employee ordinarily works, it automatically shows you the correct eligibility rules and options functionality for that employee. So if an employee usually works in Northern Ireland, for example, PayFit will show the Northern Ireland specific parental bereavement and miscarriage leave options, along with the correct fields and calculations. You don't need to remember the differences or manually check separate guidance. PayFit does it for you on an individual employee basis. And finally, all of this is backed up by our help center, where we publish full step-by-step guides ahead of every regulation change. These explain what's changing, when it applies, and exactly how to manage each leave type or payroll process in PayFit. Our goal is to make compliance simpler and clearer while you're using PayFit, so you can focus on better things. And back to you, Kay.
Thank you. And if you want to dig a bit deeper, we've pulled together some handy guides for you. So you'll find step-by-step info on switching to payroll and benefits. So like we said, perfect if you want to get ahead before it becomes mandatory. There's also a guide on the interactive payslip too, which I think has been shared in the chat there as well, just showing how each line works and how it explains pay to your employees. And if you want to run engagement surveys, we've got a guide on setting those up quickly as well. Finally, we've also got a link to our past webinar on running payroll early for the holidays. And just a reminder for those who are PayFit customers, you can always reach out to your admin at any time to get support. So if you've got any specific questions, reach out to the resolution team or to the experts, and we can help you with that as well. And that brings us nicely to our Q&A. So if you've got a question, I think Akash has been busy in the chat there as well. We do have a few pre-submitted questions. So we'll take a look at those first, and then we'll see if we've got any others that we can answer as well. So first of all, I think we've got one about bereavement. Rebecca, are you okay to take that one?
Yeah. So the question was, if you get bereavement pay, do you action or pay this before parental pay? I think that might have been paternity pay. Yeah. Okay. So statutory parental bereavement pay and leave can start on or after the date of the death of the child or stillbirth, but it must finish within 56 weeks of that date. It should actually be taken around any planned leave. So if you've already planned adoption leave, maternity leave, paternity leave, you should take the parental bereavement leave around that, so it's not interrupting or stopping it from starting when it was planned to start. So don't change the dates of any planned parental leaves, and take the statutory parental bereavement leave around it. Like I've said, you have 56 weeks to use it, so really that's enough time to take 52 weeks of maternity leave and then those extra 2 weeks on top of it.
Brilliant, thank you. And then we've got one about payroll and benefits, so I'll take that one. If we start payroll and benefits early in April 2026, can we still use pay 11 days for certain benefits in the same year? Yes, you can. It is a bit simpler to switch to everything being payrolled. If you mix methods, you've just got to ensure that you are keeping accurate records for reconciliation. But yes, you can do both. And then let's just have a look in the chat. So do PayFit have any communication templates about payroll and benefits to send to employees? Yeah, Lauren, we do. It's on one of the Help Centre articles. I believe that we have sent it out. And if we haven't, I will get it to you afterwards. But we do. We've basically wrote a little guide and also a template. So you can, change it to how it's going to suit you. But basically it explains the switching of tax and how that's going to impact them. So. I don't think we've got any other. I think Akash has been busy keeping up with everyone. Just
and he kindly shared a link to the interactive pay slips as well to replace the GIF from the slide.
Yeah.
The video is much better anyway.
Yeah, definitely. Are a lot of customers doing it earlier, would you say? I think a lot of people were expecting it to be from 2026, weren't they? So people had started getting prepared for that. So yeah, I think people are switching early. I guess we would say the sooner you do it, the better, because then you're prepared. You know, it's not a last minute thing. But it's up to everyone whether or not you can get prepared in time. But if you can, we would say do it. Before 27.
I would add as well that we obviously pushed as an industry for them to give us more time to implement the changes in software so that the software is already customers, payroll managers, payroll specialists can go in, they can use their software to set everything up, communicate with their employees. So we needed way more time. They've actually sent us the RTI specifications for April 2027, which includes all of the fields that we need to include for payrolling benefits. And it won't be too much longer before they send us all of the regulations that we need to start implementing it in payroll software. So there's no more delays. I think we have to do it from April 2027. So I think some people were waiting to be pushed and they were hoping it would be postponed another year, but I doubt that's going to happen now that we're getting all of the guidance through.
I agree. So yeah, it looks like Akash has answered everything in the chat. As we said, like if you are a PayFit customer and you've got any further questions, please just raise a help centre ticket. You've got Copilot there as well, but if you want to come through to one of us for some more guidance, just let us know and we'd be happy to help. But otherwise, we'll end that there. So thank you so much everyone for attending. Been great talking through all of this with Rebecca, who's an absolute pro with anything like this. So yeah, thank you all so much.
Thank you very much, everybody. Have a good day.
Take care. Bye now.